How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my very own personal journey to amassing $100,000 with my Vanguard brokerage account. Now let's talk for a minute because it has certainly been some time since my last video. I have been traveling, which is a luxury in and of itself, all due thanks to passive income. But nonetheless, I want to get to talking about the stock market because a lot has been going on. In terms of the market, it has been on quite the roller coaster ride. We have been continuing to react from tidbits of news from Russia and Ukraine. Tremors of COVID fears remain, and most impactful as of recently are Federal Reserve talks about interest rates, which are key for momentum should the Federal Reserve relax a bit and take a more flexible approach, which is exactly what we've been seeing right now, causing the market to jump, allowing my personal account to actually regain some ground, jumping by $1,165.53 on the day, bringing my account back up to $87,509.04. As for today's video, it is the end of the month, so I want to go over all of the dividend income that I've received throughout the month of May. That is from 5 different companies, and I've already doubled where I was last year. A video you're not going to want to miss out on. Watch it through and through, and of course, just before we dive in, go ahead, tap on that thumbs up button, as it certainly helps me out in growing this channel. And do us both a favor here in subscribing to the channel. I'd seriously love to have each and every one of you along for the ride with me. Now YouTube, let's go ahead and dive right in. So just before we get going, I want to take a moment to remind all of you how exactly we're going to be going about today's video. I'm not just going to be sharing with you the stocks that paid me out in dividends, but I'm going to be giving you my take on each company and where exactly they may be heading, allowing you all to perhaps make more informed decisions on whether or not you'd like to establish a position of your own with each of these companies, adding them to your portfolios, or if they're already in your portfolios, just continue to double down on each of them. Then finally, I'll disclose how many shares of each stock I have, their dividend yields, and of course, how much the companies actually paid me out. Then to wrap up the entire video, I will disclose the total amount of dividend income that I've received for the month of May. Now, with all of that out of the way, let's go ahead and kick us off by rewinding back to the beginning of the month on May 2nd, where we had our very first dividend paycheck come in. It came in from AT&T, ticker symbol T. Now, since AT&T's founding back in 1983 as the AT&T we know it today, it has become the world's largest telecommunications company and the largest provider of mobile phone services within the United States, which in my opinion makes for a very reliable investment, as it is just far too big to fail. However, that does not mean it is impenetrable to investor sentiment or stock market volatility. After all, their recent announcement not too long ago to merge Warner Media and Discovery, while also slashing that dividend of theirs, caused a lot of panic for investors, and their stock certainly plummeted. It has been hovering around $20 to $22 ever since. Their current P ratio is sitting at just 9. However, as an investor, we must remain forward thinking, which leads me to believe and share with you all that, in my opinion, the best is yet to come for AT&T. I do believe a comeback is in sights. Their merger was necessary after they continue to build up and out their 5G network, as well as remain highly competitive in marketing efforts with Verizon and T-Mobile. I think we're ultimately going to see a lot of momentum come in the coming months to years when it comes to AT&T, which is why analysts are forecasting their stock share price to rise back to a high stock share price of around $27 per share. As for my current position with AT&T, I hold 12 total shares. Their dividend yield is sitting at 5.25%, which allowed me to receive a dividend paycheck for $3.52. Now, later that day, I received my second dividend paycheck. This one came in from Darden Restaurants, ticker symbol DRI, which is an American multi-brand restaurant operator that was founded in 1968 and has since built a very sound portfolio worth of business within the world of fine dining, with names like the Capitol Grill, Seasons 52, Eddie V's Seafood under their operation, but even more mainstream names that are far too popular to go down under, like Olive Garden and Longhorn Steakhouse. I personally remain skeptical when it comes to investing into restaurants. However, Darden Restaurants is a little bit different in that they have a track record worth of growth and reliability. Of course, it all comes with the brands that are, in my opinion, again, just far too popular to fail. And in the best possible news for an investor, Darden has been slipping and sliding amidst all of this recent volatility, coming down from its 52-week high at $164, where it now sits around $125. That's about a 24% change. Their current P ratio sitting at 15.76, I would say it may just be the perfect time to continue to double down on Darden Restaurants or add it to your portfolio, especially as analysts only foresee continued growth coming back up to a median stock share price of $158 per share and a high stock share price of around $180 per share. I only hold 5 shares worth of Darden Restaurants within my portfolio. Its dividend yield is sitting at 3.83%, but I received a dividend paycheck for $5.70. Now, jumping to the 12th of the month, we have the world's most valuable company that sent me a paycheck. That company is Apple, ticker symbol AAPL. And while I know I don't need to say a whole lot about Apple, I do feel it's important to note what's on the horizon when it comes to Apple and why analysts remain so excited for Apple's future. First and foremost, we have the Apple virtual reality headset that will come out in 2023. And as we move into a VR world, I can only expect that Apple will be leading the charge as a massive player within the space. I mean, how could they not be? Secondly, we have the Apple car that is due to hit the road come 2025. And while there isn't a whole lot of officially released information, we do know that Apple has been openly hiring for their Titan project, recruiting the best of the best. Now, my take, Tesla will soon have very legitimate competition on the road. And thirdly, it just might be worth noting for all of us here that Apple once again blew away analysts' expectations with their earnings report, coming in strong from sales across the board, especially when it comes to iPhone. It is the phone that is just not going anywhere anytime soon. All of which is allowing for analysts to foresee a median stock share price for Apple priced at $190 per share and a high stock share price at $219.94 per share. Now, with all the recent stock market turmoil, Apple stock was not an exception to the rule here. It fell from their 52-week high at $182 all the way down to $123. That's a 32% change. As of right now, Apple's P/E ratio is sitting at 23.37. Another great opportunity to get our hands on a rock-solid dividend investment. Now, in terms of my dividend paycheck, I hold 110 shares worth of Apple. Their dividend yield is at 0.55%. I received a dividend paycheck for $24.22. Now, in terms of the last 2 dividend paychecks I received in the month, both of which came in from real estate investment trusts, or REITs for short. Just before diving into them and disclosing just how much they paid me out in dividends, I want to go ahead and share with you that real estate investment trusts are perfect for these high inflationary periods, often delivering through on higher yields, more growth, and consistent profitability. Now, as you can probably guess, which REIT is up first? That is Realty Income, ticker symbol O. Realty Income was founded back in 1969 and has done an outstanding job amassing a portfolio of over 11,000 single-tenant net lease solution properties that span across all 50 states and well into Puerto Rico, the United Kingdom, and Spain, with clients like Walgreens, CVS, Walmart, 7-Eleven, and FedEx, to name just a handful. Realty Income delivers through on reliability and does so on a monthly basis in terms of their dividend, with a current dividend yield sitting at 4.33%. Now, similarly to some of the other stocks mentioned today, Realty Income has taken a beating during all of this recent volatility and has been trading below $70 per share, making it a ripe opportunity for us all to invest into Realty Income, especially as analysts foresee continued growth at $75.50 at a median stock share price and a high stock share price at $86 per share. Now, where I currently stand when it comes to Realty Income is I hold 102 total shares, which allowed me to receive a dividend paycheck for $24.91. Now, last but certainly not least, we have the second REIT that sent me a dividend paycheck and is only bound to experience, in my opinion, exponential growth in due time, given its business model and direct interaction with e-commerce fulfillment. This REIT is Stag Industrial, ticker symbol STAG. It was founded back in 2010. Yes, it is still quite young and needs some time to mature. However, it has already done an incredible job in doing so, with the market cap sitting at $5.88 billion, a portfolio consisting of 544 buildings across 40 states. Now, what is more is that Stag Industrial focuses on single-tenant industrial properties like warehouses and fulfillment centers. Now, why is that important? It's because we're heading into an e-commerce future with Stag Industrial's top clients being Amazon and FedEx. Now, this is only going to be making for, again, like I said, explosive growth come their future. Analysts do foresee that growth coming right along with Stag Industrial at a median stock share price of $45 per share and a high stock share price at $54 per share. Now, great news considering that the stock is currently beaten down as we speak. It fell from its 52-week high, sitting at $48 per share, and it's now sitting at $32 per share, creating a 33% change. That opportunity is yours to take advantage of. Now, Stag Industrial is a position that I'm still currently building up, but in terms of that dividend paycheck, they sent a dividend paycheck my way for owning 28 total shares with their dividend yield at 4.49%. I received a dividend paycheck for $3.19. Now that's a wrap, and all 5 dividend paychecks coming in for the month of May. We were able to once again double what we brought in this time last year, so make some noise because that grand total worth of dividends is coming in at $61.54, all for doing absolutely nothing except investing my money with high quality companies, which is exactly why I love the power of dividend investing. But all proof is in the numbers, so let's go ahead and jump to the dividend tracker. We can see that $25.89 jump from last year, and more excitingly is the fact that we aren't even halfway through the year, yet here we are more than halfway to last year's total of $817. It does not get better than that. Well, maybe it does, but I'm gonna leave that up to all of you to share with me. So go ahead, drop all those comments below. I'd love to know how much you brought in terms of dividend income during the month of May and some of your highest paying dividend stocks. Now, just before we conclude here, tap on that thumbs up button and help me grow this channel. Of course, if you haven't already subscribed, do us both a favor in making your way over to doing so. I'd love for each and every one of you to be on this journey with me. Now, YouTube, until the next video, whenever that may be, I will see you all there.